Welcome back to the channel. Okay, just go ahead and pause the video and read this trading disclosure here. Okay, let's go ahead and move on to the content. Now, I do a lot of pairs trading, a lot of spread trading for Forex as well. And one of the tools that I want to show you that is very useful is a Forex Correlation Matrix. Now, the site that I found that has a really good one is mataf.net. mataf.net. So when you go here, you'll see right in the center where it says Forex Correlation. You can click on that, and that'll take you to the Forex Correlation page. Or you can come up here and go to Forex Trading Tools, Forex Correlation. When you click on that, it'll take you to this page. And let me get rid of this ad here. So what this page does is that it breaks down the correlation for the daily, the 4-hour, hourly, 15-minute, and 5-minute. Right now, we're on the euro dollar, pound dollar. As you can see right up in here, it's euro dollar, pound dollar. And for the daily, it says 90% 4-hour, 45% hour, 98, 15 is 83, and 5-minute is 85. Now, you can log in to the site. You can save your choices here by including and excluding pairs. But one of the good things about this is this area right up in here is really good to get you an overall overview. Now, if you come over here like euro dollar, pound dollar, let's say you want to do euro dollar, euro CAD. Well, you come over here where it says 93, and you see how they're highlighted. You come over here and you click on the 93, you'll see that this area updates. Now it's going to give you the daily correlation, the 4-hour, hourly, 15, and 5-minute. So let's say you want to do Euro Aussie, because right now I'm in a Euro Aussie, Euro New Zealand trade. So if I click on that, that gives me the daily correlation of 99%. 4-hour is 99. Hourly is 93, 15, 96, 5-minute, 97. So that's pretty good, highly correlated. This is a great tool to use if you're using a trading platform that doesn't have this. Go to this site and use this. So if you have a correlation for like a daily that's like, I don't know, 60%, like right down here. If we look at this, we click on euro dollar pound CAD and you click on 66. The daily is 66%. I really wouldn't be trading that. The 4-hour is 43. I wouldn't be trading that. 5-minute is like 21. That's not really a good one. What you really want to do is I like looking for 90% and above. Like pound dollar. Let's go to pound dollar to euro CAD. This one looks pretty good. So the pound dollar euro CAD is 91. The 4-hour is 30. So they definitely diverge. Now the hourly is at 94 and 15 is at 60, 5-minute is at 63. So you could chart that out and see what you think and then maybe put on a trade. But get used to using this tool. This will keep you on track and have you trading pairs that are correlated through multiple time frames. Okay, so now let's look at, this is Quantower. I use Quantower for all my charting and for my trade executions because I have it connected to Awanda for my Forex. I have it connected to Interactive Brokers because I do a lot of stocks and options and futures. And also, I'm trading like evaluations and stuff through Rhythmic. So, and right now I've got a bunch of evaluations I'm using with Bullnox. But right here, like the pound dollar, right now I'm doing a euro dollar, pound dollar trade. And I got in on the 3rd, which is right here. I got in like right here. And as you can see, it went against me right up in here, so I added another leg. And then it went against me even more right up in here, and I added a 3rd leg. So, and the reason that it's going crazy like this is that we all know that with all these tariffs that are going on, yes, it's wreaking havoc on the markets, but it's also wreaking havoc on the Forex market. So, my suggestion, and this is what I've been doing, is the amount of size that you normally would trade, because I've traded the Forex market spread trading the currencies for quite a while, and the euro dollar pound dollar has been very good at making me consistent money. But with all this tariff war stuff going about, it's just making the markets go crazy. So you got to be careful with your sizing. So what I've been doing is I've been going down half, if not quarter of a percent. That's what I've been doing, because the markets are going to go crazy and these correlations are going to break down even more with just a slight bit of news. So that's what I have going on here, is this trade with the euro dollar pound dollar. Okay. And then I have another trade on the pound Aussie to the euro New Zealand. This is for a 5-minute 1 month. This was on a 15-minute 1 month. But if I go to a 5-minute 1 month, and as you can see here, I have it all in a percentage scale on the right. And I have a video out to show you how to do that in TradingView, so you can check that out. As you can see here, it all broke down. This is the 4th. So they've been breaking down, even on the 5-minute. So once they come back together, I should be okay and make a little money. But I've been trading about half the size that I normally do, just because of all this tariff stuff going on. And with a little bit of news, it just makes the markets go crazy. Right now, we have a pound Aussie trade as well. We have pound Aussie, euro New Zealand. And this is a pretty good trade here. And as you can see here, if I do this, we're looking at a price of 2.6% difference. So that's pretty good, because if you look at this a while back, I mean, you look at that, that's like a half a percent. I mean, if we go back even further, we got this right here, which is 0.96%. That's like 1%. So yeah, it's like 1% right there. So we got this right here that is spreading out. And if we look at this, if you look at that, that's 2.7%. That's crazy. So you got to really be careful, because if you're normally trading it at like a 0.7 or a 1% spread, and let's say you come up here and you buy the pound Aussie and you sell the euro New Zealand, and you're used to it being like getting in one leg at a half a percent, another leg at 1%, and then it comes back together. When now you're trading at like 2.7%. So yeah, you're taking some drawdown. That's why, with all this crazy stuff going on, you have to be careful about the size of your positions on any trading that you do, because a little bit of news, two things are going to happen. You could make a lot of money or you could lose a lot of money. And why take that chance and gamble with that? Because you're not a gambler. You make educated decisions, and you want to preserve your capital so you can keep trading. So that's what I've been doing. Now, if you look at the Forex Correlation tool, this is a correlation tool that I put together for using Awanda. And if you're using Awanda, you want to use what's called a stat matrix. And the stat matrix, and you'll just come in here and then you'll choose what you want right here, the currency pair, things like that. and then it'll build it out for you. You'll have to build this out yourself. It's not default. You'll just have to go to the stat matrix and then just plug in euro dollar, pound dollar, euro, Aussie. You'll just have to plug the ones in that you want. But the reason I like this one is because we can come out here and we can go to the 1 day. And this will tell me what the 1 day is. So the pound dollar, euro dollar for 1 day, this is for 20 days. Let's say I go out for 3 months. Okay, so the pound dollar for euro dollar for 3 months, for the past 3 months, has been 91%. Okay, so we've got a pound Aussie trade, and we go down here to the euro New Zealand, that's 0.95. So that's on a daily for the past 3 months. So they're pretty correlated. So then what I like to do is I just jump down to a 5-minute, and we'll just go to a 10-day. Now I'm in the pound dollar, euro dollar. The correlation's 74. It was a lot worse than that. They've been, I think it was like down to 0.2 or something like that. Now the pound Aussie, and then we come over here to the euro New Zealand. You see how it highlights it blue up here? And then on the left, it'll highlight that blue so you kind of know what you're looking at. That right there is 0.84. So I think I'm in a pretty good trade. I just have to wait for them to come back to the mean, and then I'll just take them off, lose money on one, make money on the other, and then your difference is the profit that you make. So I'm just going to have to wait a few days or a week. I don't know. But I am just holding my position, and I'm trading half the size I normally do. So you want to use a correlation matrix because you want to make sure that you're on the right track. And you can even come down here and go to, let's say you want to do a hourly for the past 30 days. You can do that. As you can see, the pound dollar, euro dollar on an hourly, it's like 0.28. So the pound Aussie to the euro New Zealand is 0.95. This is a really good trade. I feel comfortable about this one. I'm not taking too much of a drawdown on that. But the pound dollar, euro dollar, I'm taking some drawdown on that. So I just need to wait for it to come back together. The pound dollar, euro dollar, as you can see here, right here, you normally would put on the trade, went against you more here, and right up in here, it went against you even more. So that's why I've been cutting my position size down pretty heavily, because you just don't know what's happening. That's all I have for this video. The main thing is get used to using the matif.net, the Forex Correlation tool, and it'll keep you on the right track of trading the right currency pairs that are correlated. That's all I have. See you later. Bye.